With the recent run we had in the last week, all right, AMC is up almost 60% in this week only. But it's very important because Friday, the stock price closed above the $20 mark price, $20 level, which we knew it was acting as a psychological level, meaning whenever people saw that it will close above 20, it will give some additional momentum the way we already had, and this might give us an indication that, hey, maybe this run that started last week may continue to be sustained in the coming days. All right, and I want to share with you in this video few indications, few data, few indicators that actually can potentially heads towards the right direction. But again, this is just looking at the data, not saying that it will necessarily happen. All right, because nobody can predict the future. Now let me share with you two things first. All right, we now have the latest data coming from the exchange itself, from the amount of short shares out there and the amount of shares on loan plus the days to cover. So this is Ortex data. All right, so we know, first off, let me set this as a standard. We know that this is just an estimation. So in reality, because the shorts don't have any obligation of reporting the short shares, which will ultimately change, probably after the end of this month, if not already the case. But there are also a significant amount of volume going through the dot pool. So we are probably looking at here what, estimated short interest of the float, meaning the shares available to trade out there, around 20.6%. But in reality, it might be, I don't know, double, triple, 10 times that amount. Nobody knows, and nobody has the ability to know unless, we have more transparency on those, the activity from the short sellers. All right. But if we take this into consideration, which is already very, very high, we know that, we do have almost 104.5 million shares being shorted, and we do have 1.36 million shares on loan. All right. Now, what is very interesting about this, because we already knew that, that the short interest was in percentage was high. But what is very interesting about this is when you add to this amount of shares being shorted, so the short interest in volume, you also have the days to cover, which is kind of high based on what we have in the past. If you scroll down, you will see that barely we do have 3 days to cover. But what is really interesting is barely you do have a combination of 3 days to cover and a huge amount of short interest in terms of volume. You can go all the way back here. That was May 28th of last year. We had 102 million shares in volume of short interest, but we only have 1 day on coverage, and this all goes all the way back to January 15 of 2021. All right. So this reminds me of something that happened when it was around I would say June. Yeah, because not really June. No, that was something else. But the bottom line is, if you look at all of these, combination between the short interest and the days to cover, barely we did have both of these being so high with a huge run up in the past days as we had. So what does it tell me? It tells me that, well, on one hand, the fact that the momentum is building back up, especially with the share price closing at that 20 level on Friday, means we might have the high chances of the market makers covering a residual amount of shares that could also cause a gamma squeeze, which ultimately will lead the share price to go higher and higher in the next coming days if we don't have short doubling down. But because we already have such an amount of short loan out there and a utilization rate around 100% means there is literally no more shares available to short anymore, because pretty much everything has been used. But because there is momentum building, it can cause, because of this buying pressure volume coming, to cause a rush on the short seller side to get out. And that is precisely why we have the days to cover. These days to cover mean if all these shorts were to cover at the very same time, because the buying pressure is coming, or it's already there pushing them to get out, this means they will have to close every short position by 3.09 days. Now, we do know that with AMC and GameStop, we've been all so much used to the fact that, well, we don't really know whenever we have a run, even if we are 60% up for the last week, does it really mean that they're not going to push it down again next week? So it's kind of mixed feeling between I'm excited and I'm like, I'm cautious. I've been here before and we never reach past, the 50s or the 70s, all right? But when you also look at the institutional holding, especially the ETF FOMO, all right? Or you look at Fidelity Momentum Factor ETF. So this is not FOMO, all right? This is FDMO. This is Fidelity Momentum Factor ETF. This is an ETF kind of like FOMO, which buys into any stock that is looking or presenting signs, showing signs of a momentum, meaning we might have either a short squeeze, either a gamma squeeze, but there is such a volatility that there is a pretty good setup on a price probably running for the last couple of days. And this was shown up as of March 24th. So that was last Friday. Maybe they didn't buy specifically on Friday, but they bought 60,000 shares, of AMC on this ETF, which gives me another indication that, hey, maybe their calculation or maybe when they see what I've been sharing here on, the short, the shares and the days to cover being the exact, as high as we never seen that before, might give an indication from an algorithm standpoint that, hey, maybe this is about to run. So again, it's not because when looking at the past, things have happened that they will automatically and necessarily systematically happen the same way in the future, all right? But this simply means that there is a potential, there are high chances that, hey, this might continue to run and bring us back to, 35, 50, 70. Everything is possible because AMC stock is literally a ticking time bomb. So just wait and see what will next week will bring us. But I'm cautious, even though it looks like we should be excited. But we've been here before in the past, so I'd rather be cautious, if you see what I mean.